Hey everyone, Eric here with a very quick small stacks portfolio update. I established a position in Pfizer that I think is pretty well positioned. I do think that it's going to be a little tough to manage in the small stacks portfolio. I actually have it replicated in my margin account at a larger scale that I intend to manage a little differently and more actively. But nonetheless, I do like Pfizer here and I like them as a long term product. So that's why I entered into a call diagonal. So let's take a look at Pfizer first and kind of where they're at, and then we'll jump over to the portfolio. So, in general, Pfizer for the last 2 years has been coming down. If we zoom out to the last 5 years, it's still uptrending. And we see them between the mid and -1 standard deviation channel, which, all sounds kind of par for the course. And then I see them approaching the -1 standard deviation channel here. Now, one of the reasons why I'm willing to get long here is I absolutely expect there to be a little bit more downside. But if you take a look at it, it's really not that large of a dollar value. So we're going to, look at essentially 36 down to 33 to get to the -2 standard deviation. And moreover than that, as soon as I can exit my XLE position, which is short puts, I'll have up I'll have some free capital that I can apply to this trade to, you know, s- average my basis a bit and scale into the trade, which is 100% my plan. A few notes. This is in my opinion, typically a very risky trade because we see the 9-day moving average essentially is going to close before the 50 very shortly. And then we see price dropped below the 50 and the 200-day. That's typically not a good thing. However, I have a longer term perspective in this trade. So that's why I'm willing to place it anyways, despite some of the technical indications that, you know, indicate to me that there might be a little bit of chop coming up. That's okay. I am definitely in this for the longer haul. So let's take a quick look at the portfolio and what we have going on. So first off, we still have XLF and Zynga. Both of those positions are expiring on the 2nd and the 9th of October, respectively. So still not doing anything in either of these. XLF, pull that up quickly, is essentially hanging out very, very close to my basis, but I still don't really see any sort of necessary adjustment to be done in there. We will leave that one alone. And then if we pull up Zynga, we see that that is just below my $8.50 basis. So I will leave that on at least for a while longer so that I can bleed out some more of the extrinsic value and then we'll go from there. So neither one of these are in any sort of position that I feel like I need to manage aggressively. Then we have Kroger, and Kroger right now still looks good. I don't have any adjustments to make in there. We're short the 36 call currently. So if I pull this up, we're short the 36, which is obviously looking completely fine right now with the product at 34.62. Now, this may be a situation where in the next day or so, I may close out that short call because if you remember, it's pretty short time frame. I have that expiring on I'm sorry, this one's on the 9th of October. So this one is a little bit longer. I was thinking about the prior trade, but I might take this off before earnings for a small profit and then establish a new position closer to the current basis because it'll still be above my critical strike and capitalize on that earnings increase in volatility, ride out another shorter term trade, and then establish a new longer term position. So that's what I'm looking at in Kroger. And then in Pfizer, right now, I established a 1-to-1 ratio, and I just realized I mixed up the positions. In Kroger, we're short the 36 and a half, not the 36. 36 is in Pfizer, sorry. Um, and then in Pfizer, I'm long the 28 call that is expiring 16 July 21, and I paid 850 for it. And then I am short the 9 October 36. And the reason why I did that is in my small stacks account, I went a little further out than I did in my margin account. And I also made sure to essentially try to collect as much money as I can. I like to trade these at a ratio, which doesn't cap my upside, but this is what trading a small account is all about. So I think making sure that when I can, scaling into the trade, purchasing another leap so that my upside's not capped is certainly the goal once I free up some capital. But for the time being, this is just how it goes trading these smaller accounts. So that's why I favored setting the short call a little further out in time so I can collect a little bit more money. The overall trade is honestly really well structured. It's over a 16% return on invested capital. I put up 850 and I took in 138. It's really just a well set trade. So we will see how this one plays out. I definitely like Pfizer longer term and its involvement with COVID. I think there's a lot of potential there. And as kind of how I've been, I'll continue updating the portfolio as I make different moves. If anybody has any questions on anything I'm doing, feel free to drop me a line. This is definitely, a revisit for me. I haven't traded a small account for some time, and it is an interesting intellectual challenge that oddly enough I welcome because these I view these accounts as puzzles. You have to have the right pieces that fit together to make sure that you aren't putting this account in a bad spot. One of the things I'm very careful about is the correlation. And the correlation in a lot of these products is very low, and that's by design. It's offering me some sort of inherent diversification in case one certain group takes a hit. Not all of them necessarily take the same scale of hit. And that is very purposefully by design. So right now, total utilization on the account is 98.84%. We're almost completely utilized. We have 4,942 that is currently committed. We do have a realized gain of $64. So realistically, my capital is 5,064. I just didn't bother inputting that yet. But my utilization is most certainly pretty high. So that is all good. That's what I expect to see in a smaller account. Now, as the market starts to capitulate, maybe time to sit out for a while and just let the trades work because I do not want to start aggressively trading these and building up losses. It's one of the main goals I have to avoid in this account. So I have no problem taking assignment on either XLF or Zynga and just holding it for pretty much as long as I need to because I like both of those products long term to the upside. And we'll kind of play it out, see what the market shows us. So, as always, anything you want me to talk about or any questions, let me know, and I will catch everybody later.